Hello viewers, today we are going to start with linear programming, and this is going to be a new topic that we are going to start, having finished the decision making techniques that we were doing. We looked at the decision making under the limiting factor as our second last decision making techniques, and we said for it was all about looking at when you have only one limiting factor. But for now, if at all we have more than one limiting factor, then we said from there we are going to be applying the linear programming. So it's what we've started with, and we want to see how we can be able to use linear programming to be able to make decisions. So with linear programming, we are going to look at what we are going to look at here is not very direct, as that we did at level 1 when we are doing the qualitative techniques, that duty paper, especially when we are interpreting some of these aspects, because at level 1 we used to just make computations and we don't analyze the results that we've got. So when it comes to level 2, we need to see the applicability and we'll be able to analyze the results that we've got. As far as the computations are concerned, we are not basically going to just compute and leave everything there. The computations are going to be the same, but the only difference is going to be that after making those computations, we have to analyze the results that we've got so that we can be able to help management make the appropriate decisions. Linear programming is, as I said, it is just like the way we did it. The same methods that we applied, the graphical method, the simplex, or the tableau method, those are the simplex tableau, those are the methods that we are going to apply even here. But the only additional area that is going to come in is the area maybe we try to look at the interpretation of the results that we've got, determining the shadow prices and all that, which we never handled with the level 1 aspect. We had just a small hint about it. So let's try to look at what linear programming is, and we can start from there. So linear programming is a mathematical planning technique which seeks to find the best combination of output that will maximize or minimize the objective function. So here, what we are trying to do is that we are either maximizing profits or we are minimizing costs. Because with management decision and control, we are just looking at costs and profits. So if you look at those ones, we see how we can, if it is on the side of the profit, we see how best can we maximize our profits. Then if it is in the side of the cost, we need to look at what can we do in order to minimize the costs that we can incur in a given activity. So the objective function is what we are trying to achieve. We are either going to maximize it or we minimize it. So those are the two things that we do under linear programming. We are maximizing or we are minimizing something. So we have a note that linear programming is applied when more than one scarce resource is given in a problem. In other words, we said if we have only one limiting factor, or we have one constraint, or we have one problem, we apply decision making and a limiting factor. But if we get the resources or the limited resources or the limited factors to be more than one, then we apply linear programming. So that's what we need to get clearly. The rest, there is nothing more to look at here in regards to the theoretical aspect, but we can maybe try to look at some of the terminologies that we are going to be looking at. Because if we don't understand some of these terminologies, what they mean, we are going to get lost. Because you may find that some of you guys, you just did QT and you just did it just to pass, but you didn't maybe pick the concepts. So here we are trying maybe to, we can bring some of those concepts, we try to talk about them, but these are the same things that you discussed wherever you studied the QT paper. So one, we are now looking at the terminologies that are used, or the terms that are being used in linear programming. They are very important because these are the things that we are going to be looking at. We don't want to start saying constraints, objective function, slack variable, shadow prices, when no one is actually, you're not actually picking them. So we better get them from the start. So we have one, we have the objective function. The objective function, this is the equation that shows what a linear program seeks to find. In other words, we are looking at either we are going to be maximizing the benefits or we are minimizing costs or problems. In other words, this is what we are trying to achieve. If you are going to be using linear programming, what do you intend to achieve? What we intend to reach at is what we call the objective function. In other words, the objective functions here, we said they are going to be either we are maximizing something or we are minimizing something. And that's something we said it is either going to be a profit or it is going to be a cost. So the other second item, we have the constraints. The constraints, these are the inequalities that show the limiting factors, that shows the limitation in the resource or the limiting in the resource. In other words, this represents the scarce resources that limit the achievement of the required objectives. They are formulated from the resources that have been limited on. What this means is that when we've been looking at the decision making and the limiting factor, we've been looking at what are they limiting us, or what is denying us to achieve some of these objectives that we want to achieve. So those things that are going to be hindering us from achieving the desired objective is what we call the constraints. And it is those limiting factors that we use to make inequalities. In other words, these inequalities are going to be either to maximize, in other words, we maximize all the available resource, or we are going to minimize. In other words, these inequalities we are going to form, they are going to form as a result of either not exceeding the resource that has been availed, or we are not going to go below certain limit. So we are going to be either we are maximizing or we are minimizing something. That's why we use these resources that are being limited. They may tell you that the direct labor hours are limited to maybe 10,000 hours that we have for the whole organization. So we are limited to that, we can't exceed that. So you base on what the objective function is saying, and you can tell whether we are going to be maximizing. If at all we are going to be maximizing, you'll have the same thing. So those are the constraints. In other words, the constraints, those are the ones that are affecting us not to achieve what we want. Then the third one is the slack variable. These are just unknowns. In other words, they're just spare capacities. They are also called spare capacities. They show the unutilized capacity of a resource. In other words, they help us to convert inequalities into equations under the simplex tableau method. So when we go to the simplex tableau method, you'll find that there is no way you can be able to make an inequality to become an equation before you introduce in the slack variable. So their role, they are only going to be applicable, or we are going to only apply them when we are using the simplex tableau method. But for the graphical, we are not going to use the slacks. So the other fourth aspect is the shadow price. The shadow price is also called the opportunity cost for each of the scarce resources that are fully utilized in the optimal production. They show the increase in the contribution if the scarce resource have been increased by 1 unit. In other words, for these shadow prices, we are looking at what will be the impact if at all we utilize, if at all they have said that maybe the machine hours we had maybe 500 hours, machine hours that were available. What will happen to the production if at all we just increase those, if at all we increase the scarce resources, or we increase the scarce that machine hours to one more hour? What will be the impact? So it's that is going to be a bit tricky, because it's something that we are going to be knowing how to calculate it, because we need to know the increment if at all the production capacity has been to the maximum point. What that means is that if, let's say, they are given you machine hours of 1,000 machine hours, and you are saying that within the organization you are using all the 1,000 machine hours. So we are just looking at, it's like we are just doing a sensitivity analysis to find whether if we can increase those machine hours by 1 unit, what will happen to the production, or what will happen to the contribution, depending on whatever we want to achieve. So that's the shadow price. It's either shadow price or opportunity cost. The surplus, this is the excess of a given number or amount. In other words, it's the excess of a given number of a constraint available. In other words, you may find that we may be given resources, but you find that not all the resources are going to be utilized. You find that they are limiting you, that they are 1,000 machine hours, but you find yourself not even utilizing the whole machine hours. You are maybe just using 900 machine hours, and you are leaving some surplus. That's what we are looking at, the difference between what we have used and what is available. So those are basically the terminologies, but there are others that we are not going to talk about. But those are the ones that we may try to look at as far as MDC is concerned, or management decision and control is concerned. We are not going to go by the other duty level, where we add in some other dual, whatever. Those ones we may not talk about them here, because at the end of the day, if you have to introduce those ones, you'll find it hard for you because it will the syllabus will be very long, or the topic will be very, very large, because you have to do the computations and you go ahead to make sure that at least you do the analysis, because even the analysis, it is the one that is taking most of the marks, because we need to advise the organization. That's why most of those we may not talk about them here. So let's look at some of the assumptions. The assumptions, we are going to talk about the assumptions at the same time we give their limitations, because we are now giving assumptions stroke limitations. We give them at once, so that we don't need to again write the limitations of linear programming, because these are some of the theoretical aspects that the examiner may like to ask. The assumptions and again the limitations. Of course, we know that if you have the assumptions, you just use that, you just oppose those ones to count to form the limitations. So we are going to see how we can compose that, how we can compose the assumptions to be limitations. So the first assumption is linearity. So what is linearity? Or what is linearity as far as linear programming is concerned? So linearity implies that, or it means that the relationship shown by the constraints and the objective function are linear. In other words, we have a linear relationship between the constraint and the objective function. There is always a direct relationship between the constraints and the objective functions. In other words, if at all you want to maximize profits, and you look at, maybe we are maximizing profits, but the constraints we have, maybe we have labor hours, we have machine hours. So you find that there is always a direct impact. If the labor hours are going to be there, then we expect those people to produce more output, so that we can be able to incur, so that we can be able to have more sales in terms of revenue. So they are saying that there is always a direct relationship between the constraints and the objective function. We say that the objective function shows us the overall aim. In other words, what do the organization, or what do we want to achieve as an organization? That's what the objective function is all about. So for example, you may find that in an organization, we want to maximize profit. We want to minimize costs. Those are the most common things that we may look at under the MDC: maximizing profit or minimizing costs. So therefore, the resources we use, and those resources, we are looking at those resources as the constraints, because they are the ones that are going to help us maximize the profit. So if we find that these resources, or the constraints that limit us on, that they use to limit, because those resources that we are going to use, they are the ones they limit us on. And they say maybe you have 10,000 labor hours, and we can't exceed that. So these resources that we are going to use should have a direct relationship between the objectives and themselves as the constraints. For example, if let's say it's a business and you probably want to maximize profit, then in order to achieve that, you need to produce the output you will sell. But to produce the output to sell, you need labor. And that labor, the labor we need, or the employees that we need, they become a direct resource that you can use to maximize profit. Therefore, if maybe we talk about the materials that we are going to use, materials and labor, because even if you have materials, there is no way you are going to use those materials if at all you don't have employees who are going to work on those materials. So we see that both materials and labor have a direct relationship, in that if any of those is not available, if let's say if labor is not available, but materials are available, then there is nothing that is going to be worked on, because there is no way you are going to look at the materials themselves and you think these materials are going to work on themselves. It is the same way that even when labor is there but materials are not there, we find that it will be again very hard for the labor to start operating on when materials are not there. So there is always a direct relationship between the constraints and the objective function. Because we said as a business, you aim at making profits. But the only way to make profit is to produce the goods that you are going to sell. There is no way you are going to produce the goods if at all these other resources, the materials, the labor, and others are not catered for. So that's what we are meaning, that there is linearity. In other words, there is a direct relationship between the constraints and the objective function. If one is there and the other one is not there, we don't expect anything to happen, because there is a direct influence. So that's all. And that's what we can talk about as far as the linearity is concerned. Then the other aspect is they are saying that only one objective. It is either we are going to maximize profit or we are going to minimize cost, but we can't do both. You can't say I'm going to maximize profit and at the same time I minimize costs. The objectives can't be at the same time. There is no way we can apply them under linear programming and we do that number at once. We must have only one objective function. So in linear programming, we have one objective function. And the number is going to be either we are maximizing profits or we are minimizing costs. And that's all. Hope that one is clear. Then the other one is additivity. In other words, only additions and subtractions are permitted in linear programming. We don't have divisions and we don't have multiplications of unknowns. We are either adding or we are either subtracting. There is no way we can say that we are going to be multiplying the unknowns or we are going to be dividing the unknowns. So under linear programming, the objective function can only be stated as maybe say 2x plus maybe 3y, but there is no way we can say that it is going to be 2x times 3y. Or there is no even way we are going to say that it is going to be 2x over 3y. And we call that an objective function. No, we are either adding or we are subtracting. It is either 2x plus 3y, depending on the given variables, or it is going to be 2x minus 3y. So if at all they have given you the number of units, they are going to be those number of units that have been given to you, and the unknown, we less or we add. But there is no way we are going to have a multiplication or a division under linear programming. It is either an addition or subtraction. In other words, we only have additions and subtractions. Then we can look at the other one is divisibility. Divisibility, we said, you find that even some figures are going to be divided to given figures. In other words, we are looking at some figures, if you can't divide them, then there is no way we are going to accept them, like having fractions, having decimals. Those two, they are not permitted under linear programming. Under linear programming, we accept fractions and decimals. We don't accept fractions and decimals. So you may not see us using any of those under our computations. The other one is certainty. Certainty means the numbers or the figures in the objective functions, in the objective function and the constraints are known with certain. It means that we know these values that we are putting in under our computation within the objective function and the constraints for that period that we are studying. We know the values. Then the last one maybe you can look at is the non-negativity variables. These non-negativity variables or constraints, they are always going to be introduced, or we are always going to introduce them, and we are only using positive values. In other words, there is no negative values that we are going to put under the constraints. There is no way we are going to be having negatives. So, in other words, we are going to be introducing that non-negativity constraints to show that the values of x and y, or the values of y and x, will never be negatives. That's why at the end of that, when you have given our constraints, we make sure that we introduce that non-negativity concept to show that these values, they can never be negatives. They can be zero, but they will never be negatives. It means they are only going to be positive values. So those are the things that we may try to look at and probably we shall explain some of others when we see them as we go through the different things that we have to talk about. So with the linear programming, we have some methods that we use to solve our linear programming problem. We said that we are going to be using graphical method and simplex tableau method. Those are the two methods that we use to be able to solve all the linear programming problems. And we are going to look at some of them, though most of them, they need, like graphical method, they need a graph paper, but that one we shall find a way of how we can be able to do, or we can do the number by the time we reach at the point where we are supposed to use the graph papers. We can just get to know, we can just get a stretch, we just sketch and we see what we can have. So, but at least when you reach at a point where you're supposed to draw that, we can just draw a sketch to show how things are supposed to go. Then we can be able to follow so that you draw the exact graph. So the graphical method, you can try to start with that one, the graphical method. Graphical method, this is used for only two unknowns. In other words, when we have only two limiting factors. When we exceed two limiting factors, all the two unknowns, we don't apply the graphical method. It involves plotting equations, because what the reason as why we don't exceed two unknowns, it's that we are going to be using a graph. A graph only has two variables, the y-axis and the x-axis. If you have three or more than two unknowns, how are you going to find those figures on the graph? There is no way. That's why we make sure that we only use graphical method when we have two unknowns only. And if it is one, we said it doesn't even go to linear programming. It goes to the other decision making and limiting factor. So it involves plotting equations generated from the inequalities on the graph and shading the unwanted region in order to find the feasible solution. The feasible solution, we've not talked about it, but it's the area it's the area of focus. It is the area that is going to help us solve the objective function or what we want to achieve. It is called the feasible solution. It is going to give us the feasible solution, but it is called a feasible area. It's the area that's going to help us solve the objective function. So from the feasible solution, values are obtained and substituted into the objective function to give the maximum or the minimum values of the objective function. And this can also be used to obtain values, to obtain the shadow prices. We talked about the shadow prices. We said they were the opportunity costs. So we have a simulation, but for that simulation, we may not go through it today or within this video because it will be a bit long. This has been just an introductory part. And we wanted to see what we are going to do with the graphical method. We are saying that we are going to be getting we are going to be getting equations from the inequalities. And from those inequalities, we are going to be getting those equations from the inequalities. And from those equations, we will be getting values that we are going to plot on graph. So when we plot those on the graph, we will be able to find the feasible solution. So this feasible solution, or the feasible area, is the area where we pick the values that satisfy the objective function. So it is on that feasible solution where we find the shadow prices. So this is very important. When we get those equations, when we get those inequalities, we formulate the equations. From the equations, we get values that we are going to plot on the graph. When that is done, after plotting all the equations, then we are going to be getting the feasible solution, or the feasible area. And it is that area that is going to help us satisfy the objective function. We shall pick those values that are going to either maximize the objective or minimize the objective, whichever objective that they want us to achieve. And it is on that same feasible region where we are going to get the shadow prices. So what we had in level 1, as I said, they were not asking for shadow prices. Because what we used to do in QT or in the quantitative techniques, we are just getting the values of the unknowns. But here, we have to go ahead, after getting those values, we go ahead also and we look, or we find the shadow prices, or the opportunity cost. So we say the shadow prices are just, it's just looking at the increase in your objective function. If the scarce resources were increased by 1, what will be the impact in the objective function if at all we increase the scarce resources by 1, by just 1 unit? For example, if let's say in the question they have given you labor hours as maybe 10 hours, and they tell you that those labor hours, that's the labor hours that we used during the period, or that we are going to be using. So if during the period you use those 10 hours and you earn a profit, maybe we can say maybe we have got a profit of let's say 20 million. So what these shadow prices mean, we will be trying to look at, a scenario where you find that, what if we increase maybe the labor hours by 1 hour? And if at all we had the labor hours of 10 hours, and those were the available hours, what if we increase those hours to 11 by 1 to make them 11 hours? Then we shall be looking at what will be the impact of that extra 1 hour we have just added on the profit. If at all when we used the 10 hours, we earned 20 million. But what will happen, or what will be the impact of just adding 1 more extra hour? That is the resource. Because the reason why we got the 10 million, the 20 million was because we used the available 10 hours, and that was the maximum hours that we had. So we are just trying to stretch, and we stretch by only 1 unit or by only 1 hour, and we see what will be the impact on the profitability. So, but what you have also to get from this is that we had an assumption that there is always a direct relationship. So even here it applies. When they tell you that you increase those hours by just one hour, 1 extra hour, it means that extra hour, due to that concept or that assumption that the direct relationship, we are going also to see that most of the times when we increase that, the impact of that extra 1 hour that we are going to add in will increase the profitability. In other words, when we try to increase the scarce resources, we are also going to increase, or we are also going to get an extra profit that has been earned. So you'll find that if, let's say, the profit has been maybe 20 million, when you add an extra 1 hour, you may find that the profit maybe has gone to 22 million. So what will happen? If someone asks you what is the shadow price, the shadow price will be that extra that came as a result of the additional extra 1 hour, which is the 22 million minus the 20. That 2 million is what we call the shadow price. Because previously you had 20 million, and you got that 20 million after using 10 hours. But when you added more 1 hour, your profit increased to 22 million. When it increases to 22 million, it means the shadow price or the opportunity cost is 2 million. In other words, that increment shows that by sacrificing this 1 more hour, that's the benefit we have got after sacrificing that more extra hour. So that's the only thing that's the only bit that we are going to add on what you had studied at level 1 qualitative techniques. That's the only thing that is going to be added. But these other things, they are the same way that we've been doing. But what you have to know that this price is going to be asked within the graphical, and it is going to be asked in the simplex tableau method. So it's upon you to see how we can be able to get that shadow price out of those methods. So that's it for today. We are not going to exceed now, because the other aspect that we need to talk about is doing computations or doing calculations, because there is nothing like theoretical aspect. The theory has been done. The only thing that I wanted to bring to you is that shadow price, but I hope you have got the whole idea. We will get to know that more in detail if at all we start doing these computations. So thank you for watching. For those who haven't subscribed, please do, and make sure you hit the notification button so that you can be updated on whenever we upload the new videos. Let's meet in the next video.